are here. We are here this morning in this plenary session. Thank you for participating. First of all, the topic of today is the regulatory challenges and the market developments in this very complex period. We come from more than 1 year now of where the picture of the power and gas, the energy sector, is quite different from what we were used to in the past. And what happened was that we realized that we have a global market, and the global market needs to be competitive in order to work well. And we realized within Europe that there were problems in competition, especially in the gas markets, and so very high prices, market very short, and difficulty to even to supply all the customers. So now there is a big discussion at the starting at the European level on what we need to do. So the challenge is to, first of all, to stay alive, so to face the situation we are now in, and to try to survive, and to continue in the very challenging program of decarbonization that was put in place even before the crisis began. So we need mainly two kinds of approaches. The first one is to understand how to continue to support investments, because we understood that one way we need and decarbonization, fine, but also for security of supply. So we understood very well in the last months what security of supply really means, what really can mean in a situation like this. So we need investment for decarbonization, but we need also investments for security of supply. So that's something we have very clear in mind. And the challenge is, how do we support this kind of investments? Obviously, the market is there, but there are also a lot of discussions on how to help out the market. And we have seen the market player in big difficulties in this period. So how to support the market to foster investments, both for decarbonization and security of supply in a sustainable way. That was the other pillar, but also sustainability is quite clear now on what it means. From one side. From the other side, we need to continue to develop the market, and the market also will need to be changed in a way. And we already knew that a big change in the markets will maybe needed for decarbonization, because renewables, they are not foreseeable. We need storage, so we need to change a bit the way in which we used to look to the system. And now the energy crisis is something even more challenging. So the discussion today was around this kind of topics. So what happened, and how to tackle this, and to develop markets, and to face the regulatory challenges we have in front. Presentation of the speakers today, very important, starting from Elisa Scarpa, which is the head of the market analysis, structuring, and pricing at Edison. So big experience in development of market strategies on power, oil and gas, and CO2 markets. So whatever regards markets, and the implementation of pricing models. So I'm sure Elisa will be able to give us a general overview on gas and power market, and especially looking at the present situation, the crisis, and most of all, how do we go ahead in this? Then Giordano Colarullo will follow. Giordano is a general manager of Utilitalia, and has been since 2016. And is an expert from the utilities point of view, and utilities are a very important market player. We have seen it in the last year and a half, and he will mainly his focus will mainly be on the electricity market reform. We are talking a lot now on the electricity market reform, even to understand each other on what do we mean when we talk about it, because a lot of time we discover that we are discussing on electricity market reform, but we are thinking on very different things and long-term market rather than modifying the algorithms of the spot market. So it's very important to continue the discussion and to understand what we really should do and what we will expect for the future. Then we will have an experience from Ozge Ozden, which is from the which will talk about the role of the distribution system operator in the it will bring us the experience from the Turkish DSO. He is also here as a Secretary General of ELDER, which is the Association of Electricity Distribution in Turkey. So again, from the DSO, the utilities perspectives. And so this is also a very important part of the discussion in the evolution of the market model, because obviously more renewables means more distributed generation, distributed storage. So what the distribution system used to do, which was simply to bring the power from the transportation network to the customer, is now completely changing. And so the approach of dispatching, in a way, power is not anymore matter for transmission system operators, but it's also matter for distribution system operators. So a very new discussion, not new, I mean, it will need to be brought to somewhere now, because it's important to have a strong coordination between DSOs and TSOs, and the role of DSOs is changing. So I think Ozge will give us a picture from his perspective in the Turkish system, which I believe is very, very interesting. I will I think I will leave the floor to the speakers, because I think they have very important, very interesting presentations. Just to remember you that if you have questions, you can put that in the chat, and then at the end we will leave 10 minutes at the end of the session to try to answer the question. The session is expected to end in 1 hour, so at 11:40, and we were told to be sharp. So I will immediately give the floor to Elisa to start his presentation. Thank you very much.
Thank you, Massimo. Thank you for the other colleagues for sharing this session together to discuss the regulatory challenges and market developments. As Massimo was mentioning, I will try to give you a general overview of what has happened on the commodity market, on the energy commodity market during the last few years. And we try to keep an eye on the drivers. We have to look for future developments. And I will then give you my view on what has happened and what we need in terms of regulatory framework and policy framework. So let me share, prepare a short presentation. I will try to keep it short. Just me give 1 second to. Okay. So the title of the presentation is Let It Be, and I will explain it during the presentation. I start with a chart with the gas prices, month ahead gas prices. The time frame is 2 years, starting from January 21. And here we have TTF, JKM, and then we have. So the three, I would say, benchmark. It's not completely true, and I will get into more details in the second slide. But we have TTF for Europe, JKM, Asian benchmark, and then we have for United States. And the chart is, I believe, very useful, because it allows me to explain, first of all, that what we are living now, it's a matter of fundamentals, and that the origin of this crisis has been caused by fundamentals. So starting from January 21 for gas market, we had a strong demand in Asia due to the needs for refill the storages. And after that, we have a very cold period at the end of the winter or at the beginning of the spring, because it was already May 21 in Europe. And this caused a very huge problem with storages in Europe. In fact, at the beginning of the winter season 21-22, storages were at very low level, and prices, as you can see here on the chart, started increasing a lot. So we were here around September 21 at the beginning of the last winter season. So what happened? It happened that in order to have enough supply in Europe, at the end of December, you see that the two prices, TTF and JKM, the gray line and the blue line, they inverted, because the TTF started pricing at a premium to JKM in order to attract all the LNG cargoes, the spot LNG cargoes, to cover the supply in Europe. So this has been the first increase in prices. That more recently, we obviously have other problems. We have the war in Ukraine, and we can see the other period. And then again, we have a lot of problems concerning supply till this very unprecedented level at the end of August, when Nord Stream 1 was definitely half with the unplanned maintenances. And we have also strong problem on the power market. I will talk later. So this chart was just to let everybody know that this crisis finds its origin in a problem of supply, with the demand that it's been increasing from the pandemic. And so obviously has to be solved in terms of fundamentals. Turning to the second slide, I was mentioning before that in Europe, I was considering TTF as a benchmark. This is not true. You see the title of my slide, to Europe. So if we have a look at what I call yesterday, this is the situation concerning January, October 21. And we had as reference prices TTF 37.7 as an average for the period. And you can see by the colors the countries that were trading at a premium or at a discount to this level of TTF. First of all, you can see that the locational spread were not so huge. And then we had the different dynamics. But if we move to the same graph for the period, the same period this year, you can see that the situation has completely changed, and that now we have Europe like split into different parts. And this is due to the fact that the LNG that I was mentioning before, we were able to attract, can only discharge on this part of Europe when we have the infrastructure to have LNG, but we don't have pipelines enough to move the LNG from the west side to the east side. So that's a very important situation, because I will show later that, as Massimo was mentioning, we need to think very well to investment, and this is a problem of infrastructure. Commodities are cyclical, and as always shown in the story, that we have this period of boom and bust. But one of the main problems for this is that prices are not able to give signal to investment, and that we invest when prices are very high, like now, but then it takes time to take investment online. So I believe that these energy prices has again stressed these problems, and we need to take it into account. Before moving to what can happen in Europe in terms of development of infrastructure, let me take a few minutes to let you know what has happened in terms of demand. And I try to explain my title, that it was Let It Be. So I'm particularly happy to show you this graph on demand, although these also take a very negative point, because we can see a strong decrease in consumption, in industrial consumption now. I will show then distribution consumption for gas, but I will show you other two slides for electricity market as well. So it's the same path, the same situation. We have a strong demand reduction. Strong demand reduction is the response to very high prices. And so the market is demonstrating to work. That's why I was calling the presentation Let It Be. The market is finding an equilibrium itself via demand. It started last year, industrial demand, gas industrial demand in Northwest Europe. We saw the first decrease in September 21. It's now very evident, both in Western Europe and in Italy. The graph, just few words, how they are built. We have 2022 in black line, is the black line. The red line is the minus 50% with respect to the period of 2017-21, which is a 15% voluntary reduction target asked by the European Commission. We see that we are well below the level of reduction that was asked. So this is the good news for the market. It's a bad news for the economy, because this is a recession. Although it's not very clear, it's not yet very clear in GDP data, but this is a sign of recession. And you see that concerning the distribution, it's a little bit different because it's obviously more weather related, but also on the distribution side, so on the residential consumption, we have seen the decrease. To give you some numbers on Italy, we have seen with the warm temperature in November a reduction of around 25% with respect to the average 2017-21. So I'm coming to main drivers, and then I will spend 3 minutes on looking at also at the time, not to be late on the presentation and to waste time. We have many drivers to watch. Obviously, supply is a problem. Obviously, level of storage is a problem. But we were lucky with the temperature at the very beginning of this season. So the problem has now moved to summer 23, when we will have to refill storage again. Here I put some numbers concerning new regasification in Europe. We have around 60 BCM coming online in the next 2.5 to 3 years. But we don't have a project for liquefaction. We have half, so around 30 BCM of liquefaction, coming online. So what will happen is that what we have seen with the 2 Europes, the gas, will have the opportunity, especially for Germany, which is developing a lot of infrastructure, to move there, but we will not have new supply coming in. Moving to the power markets, again, we can see very quickly the same situation I've shown on the gas market. The framework with the electricity market around Europe has been exacerbated by the fact that, yes, there has been this dramatic crisis on the gas prices, but electricity market suffers a lot also for problem with the nuclear capacity in France and with the hydro situation last year. In terms of consumption, we can see behavior very, very similar to what I've shown for the gas market. So also in power demand, we see an important decrease. And if we take into consideration for the Italian market, as for the power market, we can disaggregate the data for the different sectors, but we have the IMCEI index, which is the industrial electricity consumption index, and we see that we have seen a decrease in the industrial consumption. I was mentioning before the situation with the French nuclear output and the situation with the hydro level. This situation is still going on, unfortunately. And in fact, if we have to come to the drivers and the challenges in power market, for sure, we have the problem again, also here a problem of supply, not only in terms of gas. You know that the hydro situation has been very dramatic and impacted the nuclear because this summer the nuclear power plant had problem for cooling. The coal, because in Germany the logistic for coal is on the river, the transportation is on the river, and if the level of the river is very low, we have problems. So we still have this very complicated framework, both for gas and for electricity markets. Few comments on the regulatory challenges and market development. So we have seen a lot of different reforms this year. We have seen a lot made by the European Commission, but also made by the different states. So we have this two-tier regulation. And I believe that, for example, I was mentioning before the problem with the storages. So the decision to put the compulsory level for the storages has been very important, because the prices were not able to give the signal to fill in the storage, because the spreads were in an unusual, I would say, unseasonal situation. So that has been a very important reform. As I was mentioning at the beginning, I believe that this market has demonstrated to be able to find a new equilibrium itself. And so I believe that every distortion that we risk to introduce via a price cap can be very, very dangerous. And last thing I want to mention, the fact that I believe that there is more awareness of everything. So it's not only a matter of professional people working in the energy space. There is a more general awareness of what is happening. And we have seen also from the residential consumption that there has been a response in this sense. And so on this side, I'm very positive that this will help the market to find a new equilibrium. Again, as Massimo was mentioning, it's very important to give the right signal to investment, because we have seen that this crisis has been generated by a mismatch between supply and demand. Thank you.
Okay, since this is a self-managed session, I'll put a slide on. Good morning, everyone, and thanks, Elisa, also for timely delivery. I should hope everyone can hear me. I unfortunately I got one slide as in Italian, so pretty useless, but I'm going to get through it quite quickly. Trying to give a sense, it follows quite nicely, I think, from what Elisa was saying before and Massimo in his introduction, because as Massimo mentioned, the focus is going to be about market design, and Elisa mentioned, the need at the European level to react as in a way induced by this crisis we are in the midst of. But let me just start with, in many ways, giving a wider perspective. Market reform discussions in Italy and Europe a bit more dated than the current crisis, in the sense that we've been thinking about how to shift the market model in the world of decarbonization, but with guaranteeing security and adequacy of the system. So in many ways, the current crisis, the high gas prices and the reflection on the electricity prices have accelerated that thinking in one respect, and made it a bit more kind of politically charged in many respects, because of course you would find, especially on the demand side, the requirement of having renewable energy deliver, not just in terms of energy, but also lower prices. So this gives us another angle to the issue. Let me just start with a preamble, if you like, which is the top part of this slide, unfortunately in Italian, but hey. Pretty much, we started off with a model that went through liberalization, was hinged on big infrastructure investments in terms of transmission, in terms of generation, power generation based on programmable technologies of different sorts, base load, peak load, etc. But you practically had a system which was, by definition, a secure system, very oriented on putting in place the right capacity, doing it in an efficient way, and in many ways promoting competition to drive prices down thanks to investments with more efficient technology. In Italy in particular, we had an issue about bottlenecks at the geographical level, but generally speaking, this model kind of had a beneficial effect. Then in this model, though, if you like, in this slide, I say integration of the renewable energy was quite weak in the sense that it came along simply, and we gave it, some incentives, some priorities in the system, that how we integrated it, but it wasn't really focused on hinging, so building the entire system on the renewable energy. It was the other way around. It was the sort of technologies, existing technologies and infrastructure, and then you added bits, possibly more and more of it, but still adding it. So it's a sort of reversing the perspective upside down. And in that sense, in the bottom part, so the red sort of arrow shows you the bottom part, which is you have actually decarbonization is the driver, key investments in renewable energy in that sense, and you have to maintain security as we experiencing, in particular, and adequacy of the system. So in fact, this shifts a bit the perspective entirely of the market, a market which was very much on capacity constraint market type of market. So you needed to have the right place, the right capacity for the right time, an energy constraint. So you actually have to guarantee over time, but that requires a lot of changes. In particular, shifting a lot on having measures of storage, guaranteeing that storage is sort of used in the market in the long term, and indeed have the capacity growing a lot on the renewable energy and the right infrastructure to respond, and given the sort of how renewable energy is developing along the networks, which is TSO and DSO. Now, there are a few challenges, and as I said before, I started off saying, well, reality is that this discussion has been going on for a bit more than the crisis. The crisis is just making it more radical. In Italy, in particular, we've been looking into developing sort of a platform for renewable energy, so a very centralized system to promote the development of the renewable sources, with facilitating this, trying to facilitate this with long-term contract. So it's a platform with a common sort of counterpart that should, guarantee long-term contracting and securing the investors in that sense. But I mean, this now, as I was saying, is then built on this initial model, which is for the purchasing power agreements with a common platform. Now we're building the issue of quickly sort of transferring the benefits of the lower costs of these technologies onto customers. So the debate has expanded the angle, as I was saying, and in that respect, it's a bit of a fine balance to find, because you have to kind of intervene in the market, but you cannot really sort of moving to a very regulated, in our perspective anyway, a very regulated approach to this. So some of the models perspective by some parties, of course, have a much more heavy-handed intervention on the type of prices that then should be made available to the customers. In any way, the balance between sort of incentivizing new investments in the long term with the right prices for the investment to have the right remuneration, and the demand side gaining from this lower overall cost of producing with renewables, it's the key aspect that we're now debating. Because of course the platform I was mentioning before has been in place now for a while, but hasn't really taken off in terms of number of contracts that you see, a new capacity. We're improving, but not at the right pace if we want to achieve the decarbonization targets that we've given ourselves. So first issue in practice is to take the model that we sort of put in place and expand it, giving right signals for investments on capacity for renewables, but at the same time benefiting the demand side. And this is not is an open debate at the moment as to which model to sort of embrace in that sense. This cannot go, as I was saying, this is an energy constraint model. We have to make sure that average demand is always met, and of course renewables have that intermittency issue. So accompanying this is time shift technology, so storage and then products on the time shifting, and we're moving on that. In Italy we had a law introduced in 2021 already, and now this is a working in progress kind of activity, because we were developing exactly that. So sort of a future markets, so you have storage on the one side, developing storage, the physical aspects of it, and then a financial instruments to use that to couple with the physical availability. This should guarantee and complement the sort of developing of much more energy coming from renewable sources. The two cannot go one without the other. So if we want to really shift, we have, of course, more renewables and becoming the centerpiece of the generation, but it has to go with capacity of storage to accompany that, and the right financial instruments to make sure that that overall cost will be sort of included in the price of energy, and the right incentives will be given for investments. So this will mean that the design as we imagine it now will sadly make sure that we do not need conventional generation? That's the certain answer is no. We have in this country, in Italy, we have a capacity market in place, which will deliver until 2024 for this first round. That has to go on. It may require some more design or rethinking of the exact design, but we do need to secure adequacy of the system. It's probably going to be a different perimeter, if you like. So capacity market and also the balancing market as well will require some rethinking. But those two are important. In fact, I would say crucial to maintain adequacy of the system. So the three pillars, in fact, I've been kind of discussing through is decarbonization as a centerpiece. Then you have security of supply and adequacy. And all these markets that I mentioned have to interact in many ways. It's a design overall under construction, but I think, or I sense, that we started with a good pace in Italy at least. And of course, we cannot lose momentum because we need to speed up, in fact, with the right investments, in particular in capacity of storage and indeed renewable generation. I was going to also mention something around the role of DSO, but I understand Ozge will do the job for me, so I will leave it to that, and I'll thank everyone. And of course, we're here for questions after all. Thank you. There you go.
So I'd like to thank my colleagues and also the organizers for this great session. It's really happy for me to be with you again this year in this organization. So as Giordano said, I'm going to talk about role of distribution system operators, DSOs, in energy transition. And I'll make these presentations under two sections: energy transition trends in Turkey and also role of DSOs in energy transition. But before I start these sections, I'd like to give a brief information about my organization. ELDER, Electricity Distribution System Service Association of Turkey, is a non-governmental organization that continues its activities under umbrella organization of all electricity distribution companies in Turkey since 1999. So our vision is conducting research about electricity distribution systems in terms of economy, energy policies, and international regulations. And our mission is to provide electricity distribution service in accordance with value creation for the country. But maybe the most important is the values. Our values are trust, transparency, participation, innovation, and agility. So just to give a brief opinion about Turkish electricity distribution sector, we have around 48 million customers, and the country's population is currently 85 million. Built consumption, it's 253 terawatt hour. The line length of our network is 1.4 million kilometers. Number of transformers is over 500,000. And at the right-hand side of the slide, you see the invested figures. So I think all in all, Turkey is the fifth biggest electricity market in Europe after Germany, UK, France, and Italy. So to start my agenda under the title of Energy Transition Trends in Turkey, first of all, I'd like to give a brief picture of the difficulties and challenges that we face today. This is, I think you all know the energy trilemma published by World Energy Council every year. And according to this perspective, we have to achieve three factors in our daily life of our sectors. First, we have to provide energy security, which means that we have to comply the demand every hour of the year. But at the same time, we have to comply with environmental standards and sustainability, which is called, as you know, net zero. But these two factors bring many costs to the system, which has to be paid by the customers at the end of the day. So customers, it's a term for us, but citizens, maybe it's a right term for the politicians. So this is not a easy equation. This equation is not to be maximized, it has to be optimized. So this is the challenge of today, I believe. So how we can overcome this challenge? I believe technological breakthrough and new generation workforce is the only way out. And to talk about only the current commercial trends in the market at the moment, not the upcoming ones like fusion energy or hydrogen, green hydrogen energy, we can talk about distributed generation and storage, electric vehicles, which makes all the society, all the sector to comply with the higher standard digitalization and cybersecurity, sustainability, and at the end of the day, to comply with all these technologies, we need a different set of skills for our workforce. So from Turkish perspective, only for distributed generation, which is around the facility number for unlicensed facilities is around 9,000, and the capacity is close to 8,000 megawatts. And these, on top of that, as a result of the recent regulation in Turkey, now storage facilities are integrated with wind and solar so that they can have the privilege of eased processes. So at the end of the day, for this new application, the installed capacity application is around 67,000 megawatt. This is a huge number, but in the first phase, I believe 10,000 megawatt will be on the market very quickly. So what we have to integrate as DSOs is rooftop PVs, solar, wind, storage, but also we should never forget the cheapest energy source is the efficient energy at the end of the day, I think. So the other trend, as you know, it's the electric vehicles. This is again, from Turkish perspective, until 2030, we are going to have at least 1.6 million electric cars on our roads, which will require $1 billion of network grid and charger socket investments. So as you see the numbers on the slide, electric vehicle number, today it's only 8,000, which is a small number. We are coming after Europe. Sometimes coming after, it's from my professional and investor perspective, it might be good because it might be cheaper. The technology would be there. But the numbers will be multiplied by 200 until 2030, and it's going to be 1.6 million. And to comply this number, we will need more public sockets on our roads, and the number will be multiplied by 53, and it will be 160,000 public sockets on our roads again. So I always say that these new paradigms require digital transformation and cybersecurity. From my point of view, these are twins. So if you have digital systems, then you might have digital disasters, which require cybersecurity. And as you see from the numbers, these numbers are global. And as a sector, energy sector, we are not at a good position, unfortunately. This is a picture for all of us, not only for Turkey. So cyber attacks, in terms of percentage by sectors, we are at the third after finance and insurance and production with 11%. But our digital maturity level is only 1.4 out of 5. We are slightly over oil and gas, but as you can see from the right hand side of the slide, the scores for other sectors are pretty high, higher than our sector. So this is, I think, one to do for all of us to achieve immediately. And in terms of energy transition trends, I think we all agree sustainability is very important. So we need to carbon-free. We need to have carbon-free operations, but also we need sustainability-focused green finance. To make them real, we need to decrease our emissions, and there are 3 scopes which is internationally recognized for DSOs. Scope 1 is for our own consumption, and this is less than 1%. Our vehicles, our F-gases emissions, the emissions resulting from fuels that we use to heat our buildings that we work. So this is like 0.5% only. And in terms of scope 2, these are technical and not non-technical losses. And this is pretty high in Turkey, unfortunately. I will show you the figures. But the most important thing is the scope 3. This is the purchased goods and services. For instance, cables, transformers, and those kind of stuff. And also our employees commuting and transportation issues are under this sections. So what we have to do all together is we need to access to green finance. Therefore, we need to be compliant with financial institutions criteria. This is very important. And also we need to invest for a greener network, which will present all of us new business models, new investment resources, and new cash streams. The good news is the challenge is big, but these new challenges would also provide additional financial resources for the sector. And I think this is the final slide of this section. To make them real, it's not coming, without doing anything. We need people. I mean, good people, skilled people make the difference, right? I mean, now we have a football World Cup, and you see the final teams, the teams which are qualified to final have the best footballers. So best teams are composed of best footballers. So as a sector, we need a new set of skills. So just to give an idea, only for distributed generation related capabilities in 2017, we needed 345 different skills. In the last year, we need over 600 skills, and the increase is 74%. And this new set of skills affected in 2017 only 30 business families. Now the number is 44. And in the bracket, you see some of these business families. I just don't get into the details. And in terms of digital skills, which is at the right-hand side, you see that, again, digital skills, including digital design, digital communications, circuit design, and mapping are growing sharply and rapidly. And skill numbers are multiplied by 2.2. It was 46 in 2017. Now it's 101, or even in the last year, maybe now it's we have even a bigger number. And with the increase in the use of digital in our corporate ecosystems, securing data, which means cybersecurity, has become a key problem. And cybersecurity skills, again, multiplied by 5 times. And even in support roles like sales, I mean, this is not a technical thing. It certainly requires big skills, but even for sales, marketing, and finance, digital skills are increasingly in demand. So I'm coming to the second section, which will be even briefer. what would be the role of DSOs in energy transition? So let me just use a metaphor. Electricity networks are like the veins in the body. Our heart is the generation facilities, but to convert these like blood or energy to the all cells in our body, we need DSOs. DSOs are just like the vessels that carry the clean blood pumped by the heart to the whole body. So this importance of the DSOs will increase even more in the near future. So I just tried to find at the end of the day, what would be the major targets? What would be my message for the future? So I believe DSOs have three major targets. First, DSOs are the facilitator of the energy transformation, which gives us two roles. First, we need to modernize our grids, which means that we also have in Europe, in Italy, in all the countries, very old network structures. So we need to renew them, which will be costly and which will not be easy. But also, new distributed generations sources are coming in the line. So we need to integrate. So we will need huge amount of investment to achieve these two objectives. Second is decreasing losses. First subtitle is technical losses. Second is a polite name called non-technical losses, which means that stolen energy, unfortunately. And this is big in Turkey, unfortunately. And third is in terms of emission, it's the most important one, carbon-free procurement and supply chain. So this is like 90% of the all emissions that Turkish DSOs are responsible for. So we need to make our production, transportation, and processes carbon-free, which is not easy. And for the first target, we need conventional investments. I give a brief information about that, but we also need to electrify all buildings, but also industry, so that we will need heat pumps, microgrids, and also e-mobility and grid scale storage is already on the market. But one of the most, but maybe the new thing is it will be the resiliency. Load management will not be easy as it used to be for DSOs. So because there are many multiple prosumers, so that now DSOs are also becoming more and more responsible to balance the system. But climate change is, I think we all agree, after so long years, 2 long years, the climate change is real. So there are more natural disasters in Turkey, but all over Europe. So we need to be ready for these disasters due to climate change, which is also under the title of resilience. For that, to achieve all these targets, technology will play a great role, which I already mentioned. So this is the numbers for distribution network losses in Turkey. There's a great progress, but it's still 12%. I believe half of this 12% is technical losses, but the other half, it's again, some people are stealing from other people, so we need to avoid it. And for carbon-free procurement and supply chain, we need carbon-free equipment, carbon-free transportation, and carbon-free processes. I'd like to thank you all for listening to me. Have a great organization again. Thank you very much.
Thank you. We don't have any question. I don't know if you want to make question between us. No question. Okay, thank you. So thank you for your time. We will close this session.
Thank you. Bye-bye.
Thank you very much.
Thank you. Bye. Bye.
Bye. Ciao.